Hey, what's up, stock compounders? Brad here. So it's Friday. So we're going to cover the 10 most popular stocks on Robinhood from the last week, ending July 3rd. What are the millennial investors buying? So let's get right into it. This list is from a website called robintrack.net, and it shows the most popular stocks in the last week. So I just want to run through what these columns are. They kind of represent the filters that I use as an investor to try to, decide whether a stock is worthy of taking a closer look at. So the first one here, market cap, that really just tells us how large the company is. It's the number of shares outstanding times the stock price, and that's the market capitalization of the company. This is the price as of today. So if you're watching this video, a couple weeks from now, you have a reference point from when I'm making this video, what the price is currently. Now, the price to earnings ratio, it's kind of an old time metric for, how cheap or expensive a company is. It's the price per share of stock divided by the earnings per share. So, a lot of these have an X. The reason for that is these companies aren't earning money. Okay. So there's a couple of reasons someone would buy a company that's not earning money. Either, they project that the company will be earning money in the future, and this is kind of a long-term buy and hold based on their projections for what the company is going to do. Or, it's just a short-term trade. They think someone will be willing to pay a higher price for this stock tomorrow or a week from now or a month from now, which would be kind of a trading speculative play. But you can see here there's 3 companies on this list that have a price to earnings ratio. Now, to be fair, Tesla is earning money. Just recently it started earning money, but the earnings are so small compared to what the price of a share of stock is that this number would be, crazy high, and it would be meaningless. So that's price to earnings ratio. Super investors. So this is how many super investors, how many of the best investors in the US own this stock, okay? And this website, Dataroma, is awesome because it aggregates all of the kind of what these great investors are holding in their portfolios. And so you can click on any of these investors and see what stocks they hold in their equity portfolio. And every quarter, it's required that these investors update what their holdings are, what they've bought and sold in the last quarter as well. So this is so underrated, such a valuable resource to know what the best investors in the world are buying and selling and holding. Monish Pabrai calls this bowling with bumpers. If you only invest in companies that a great investor has added to their portfolio, you dramatically reduce your risk of losing money. Okay, bowling with bumpers. So you can see here, there's one investor that owns this one. 4 of these companies are owned by at least one super investor. It's a very important filter for me. Now, earnings yield and return on invested capital are 2 metrics that are used by Joel Greenblatt in his Magic Formula stock screener. Earnings yield is a measure of how cheap a company is. Return on invested capital is a measure of how good a company is. And when you combine those 2 metrics, you're able to screen companies by how cheap and good they are. The cheapest and best companies, the best combination of those 2 metrics show up on top. And I'm a big fan of the Magic Formula investing strategy. So anyway, we got earnings yield, measure of cheapness, return on invested capital, measure of how good a company is. Earnings yield, I like to see over 10%. Obviously, there's nothing on this list that comes even close to that. Return on invested capital, I like to see over 20%. Again, nothing on this list that checks that box. Value Investors Club. Okay, this is an investing community that was started by Joel Greenblatt. And here's the website. And basically, great investors submit investment ideas. Okay, and in order to have your investment idea show up in the Value Investors Club, it has to pass some rigorous tests. The people who manage this site need to regard it as a very sound investment thesis. So they're well worth looking at. If you're considering a stock and it has a write-up in Value Investors Club, it's an awesome thing to digest in order to help you decide whether or not it's worth investing in that company. I like to stick with investments that have a Value Investors Club write-up. It's kind of a shortcut to understanding the business. You've got a great investor who's already looked at it, broken down what they think are the most important factors for the investment thesis in that company. And you can see here there's 6 out of the 10 on the list here that have a Value Investors Club write-up within the last 3 years. So that's pretty awesome. And then I just gave a quick kind of description of what the company is, what it does. So let's go through these without further ado. Workhorse Holdings, the most bought stock on Robinhood in the last week. Now it seems like this is a play on the whole electric vehicle. There's so much buzz around renewable fuel vehicles, it seems like, with millennial investors these days. So Workhorse makes electric delivery vans and drones. It's easy to think, wow, this company could get bought by Amazon, right? For, much higher than what it's trading at now. Again, no earnings. So, everything about this company is what's possible in the future. There's kind of no valuation based on the current financials of the business. It's all speculation about what could happen, which to me says it's a risky play. At least for me, it would be a very risky play. It doesn't check any of my boxes. Again, it's a story stock. Everybody thinks I missed out on Tesla. Look at how high Tesla's gone. What else can I buy that might, kind of replicate what Tesla has done? So you see electric delivery vans here. You see hydrogen and fuel cell systems, electric vehicles. Obviously, that's Tesla. You see Chinese premium electric vehicles. Tesla back when it started with the Model S. You've got this blank check company that announced a merger with Hyliion, which Hyliion basically takes existing trucks and makes them hybrids. So it kind of adds on an electric vehicle hybrid technology. So they're not building electric trucks from scratch. They're modifying existing diesel trucks to allow them some range using electric. But this company, this blank check company that announced a merger with Hyliion, in the last 2 weeks, it was $10 2 weeks ago, and now it's 27. So it's gone up 2.7 times in just a couple of weeks. So that gives you a sense for how much hype there is, how much excitement there is, or how much FOMO there is about having missed out potentially on Tesla, maybe having missed out on Nikola that also, announced a merger with a blank check company and just shot to the moon. So I think a lot of this, piling into these renewable fuel vehicle companies is based on, FOMO. They don't want to miss out again. So that's a little concerning to see that. So that's Workhorse Holdings. Gap. Gap, it seems like Gap shot up recently because they announced a collaboration with Kanye West. So it'll be really interesting to see, what that does for Gap's earnings and stock price moving forward. I'm not even sure what kind of following Kanye has. I'm sure he has a huge Instagram account, maybe TikTok, really active on these popular social media platforms, which could really help Gap and its brand image. We'll have to see what happens with that. There is one super investor who owns Gap, so that's something. But obviously, none of these other boxes are checked. Gap has lost money in the last 12 months with the downturn in the economy. Plug, hydrogen and fuel cell system, I already mentioned the description there. Not much to speak of here. There is a value investors club write-up for Plug, but it's a short, okay? So that means back in November 2017, some smart investor was looking at Plug and thought, I think this stock price is going to go down. So they submitted a short thesis for Plug. So if you're thinking about buying Plug, if you've already bought it, check out this write-up that was a short thesis back in 2017. Obviously, it's been 2.5 years since that write-up, a little bit more than that. But still, there are things to glean from that write-up about the company that I'm sure still apply today. Amazon. Amazon, it's one of the most owned companies. Well, I'm guessing Facebook and Google have more super investors that own them than Amazon, but 16 is a lot of super investors who own Amazon. Obviously, a great company. Now, the thing with Amazon is when you have a price to earnings ratio of 138 times and you're a $1.4 trillion market cap company, I'm a little bit puzzled by that, because a PE ratio this high of 138 implies huge growth into the future, okay? Because based on present earnings, based on earnings over the last year, you're paying 138 times what those earnings were. And no investor is going to do that unless they expect huge growth into the future, huge growth in earnings. But when you have a $1.4 trillion market cap, I think they're the third largest company in the US right now. It's hard to grow that much when you're already one of the biggest companies. So, this it seems like a really risky play, because it's hard to imagine a whole lot of upside when you got a price to earnings ratio of 138 and you're a $1.4 trillion market cap company. There was a Value Investors Club write-up back in March. Of course, the price back in March when this write-up was done was just shy of $1,800 per share. Now we're approaching $2,900 per share. So, Amazon, obviously a great business. There's no such thing as a great business that's a great investment at any price. And to me, this price is getting quite a bit scary, actually, in terms of an investment. So that's that one. Tesla. What do I want to say about Tesla? $1,213 a share. I can remember, when was it? I think it was back in March. The price got down to somewhere around 400. Okay. So in the last 3 or 4 months, the price has tripled. You can see this write-up from August of last year. The price was $234 per share. It just seems really expensive, guys. There's barely any earnings. People think this thing is going to go to the moon, and it shows by the price. I think it's the largest market cap auto company in the world right now. So, there's nothing but upside already built into the price, which is quite scary from an investment perspective. So, I'm watching Tesla. I'd be interested in buying Tesla. I mean, it's got to get down to 400 before I'm even going to consider looking at it. And if it never goes down to 400 again, that's fine. I don't need to be part of every company, every stock that does incredibly well in order to make money as an investor. I am just fine sitting on the sidelines until Tesla comes way down to the point where I can kind of justify the valuation. LCA, blank check company, similar to what happened with Nikola, what happened with SHLL. It announced a merger with Golden Nugget Online Gaming. So it sounds like people are excited about that. I think this whole blank check company idea, there's a whole subset of companies called SPACs, Special Purpose Acquisition Companies. And my sense is that there's a lot of Robinhood users who are subscribed to these, newsletters or blogs that kind of reveal these SPACs or penny stocks. Investors looking to kind of swing for the fences. This seems to me to be one of those swing for the fences plays. So it's very small, $571 million in market cap. So yeah, I mean, there's nothing compelling here in terms of my filters. There is a write-up from October 2018, being a blank check company, not having any revenues, potentially a lot has changed since October 2018. But if you are looking at buying LCA or already have, it's probably worth checking out this write-up in Value Investors Club. Pfizer. So it seems like Pfizer is a play on the vaccines. It's a very large pharmaceutical company, one of the largest. I believe they're currently running trials on vaccines. You see the PE ratio of 12. Seems pretty good. Seems pretty good to me. I don't know what the average price to earnings ratio is for the pharmaceutical industry or even for the kind of largest players in the pharmaceutical industry. But, 12 seems reasonable. It's nothing super compelling to me, but it's reasonable. 7 super investors own Pfizer. The nice thing about Pfizer is you can use it to bet on like a vaccine breakthrough. But if that doesn't play out, the stock isn't going to crash because it has all of this existing business already because it's such a large company. On the flip side, that also means, if they do come up with a vaccine, the price isn't going to go to the moon because it's already a very large company. So that's kind of interesting to see in here. NIO, a Chinese premium electric vehicle company. I imagine something like what Tesla was when it was just getting started. Again, nothing compelling here. There is a short thesis in Value Investors Club from March of 2019. Now, it was kind of interesting to look at that. The price was $5 per share when this short thesis was proposed. Now, in the coming months, April, May, I don't remember exactly when it was, but the price dropped to $1.50 per share. And this short thesis actually won an award in Value Investors Club for being, a great bet. Of course, the price now is almost $10 per share. But that doesn't, I'm not saying you should short this because it's twice what it was the last time someone wrote a short write-up on it. Companies like this, especially with all of the hype around electric vehicles, I mean, this price could go to the moon, even if that has no basis based on the fundamentals of the business. I don't bet against companies in general. Because when you short a company, the best you can do, this froze on me, I'm going to reopen that. When you short a company, the best you can do is, that went away. Okay, well, you guys won't see me. When you short a company, the best you can do is a double. Okay. Um, and the worst you can do is go bankrupt. So I am not a fan of shorting. So anyway, I don't see any reason to be interested in this company right now. But I get that there's a lot of hype around electric vehicles. Shell, I already mentioned, is a blank check company that announced a merger with Hyliion that I think is going to close in the third quarter of 2020. And again, there's a lot of excitement about this. Robinhood investors piling in. The price is up about 2.7 times in the last 2 weeks. Now, this is the most interesting one on the list, I thought. Office Depot. Okay. Now, Office Depot, I want to show you guys this thing here. Office Depot announced a reverse stock split just a couple days ago. Okay. That essentially means the number of shares outstanding drops by 10. Okay. So if they had, I don't know how many they had, but say they had 500 million shares outstanding, all of a sudden there are 50 million shares outstanding. And what that does to the stock price is it's supposed to boost it by 10, okay? Because given the same market cap, if you reduce the number of shares by a factor of 10, your stock price is going to go up by a factor of 10. Now, this is interesting. Office Depot draws in Robinhood traders after reverse stock split. It's unclear if the Robinhood traders just like stock splits, that I think they're being sarcastic, or being pulled in by the new share price. So what's interesting about this is, Office Depot stock went up, I think it went up about 9 times, didn't quite go up 10 times. But, put yourself in the position of a Robinhood investor who's using price movements in order to decide what stocks to get in and out of. This is a common thing that traders do to try to jump on trends and then ride those trends and get out before those trends reverse. If you see a rapid rise of Office Depot stock, a 9x jump in a day, a lot of these Robinhood traders are piling in because they see that. And of course, there's nothing in the fundamentals of Office Depot that created that price jump. It was like a financial engineering tactic from Office Depot to try to get people more interested in their stock. I don't exactly know why the management of Office Depot decided to do this reverse stock split. Maybe a stock trading at $2 a share is much less appealing to investors than a stock trading at $22 per share. I don't know, but it's just madness that you get a reverse stock split, and then it's the most popular stock in Robinhood, even though nothing has happened with the business. It's quite telling about what's happening on Robinhood. So that was fascinating to me. And you can see back in April of 2019, there's a write-up for Office Depot. I think the price back in that write-up was $2.40 per share. So if you adjust that for the reverse stock split, you're looking at $24 per share. So the price has dropped a little bit since this investment write-up was done back in April of 2019. And I look at the brand Office Depot and I just think, they're going to get destroyed by Amazon. I don't know, maybe they're pivoting into areas that are more profitable, but I just think of them as a big box store retailer for office supplies, and it's impossible for me to imagine a business like that doing well in today's environment. So that's all I got, guys. I just wanted to kind of talk through the top 10 stocks that Robinhood investors are buying. And there's I gotta say, there's really nothing here that's interesting to me as an investment. Gap, I don't know retail. So I have no special insights there. Amazon, way too expensive. Tesla, way too expensive. Pfizer, if I'm going to make a play on a vaccine, um, I'm probably not going to do it with a $192 billion market cap company. That's just not something where I see asymmetric upside to downside, the kind that I'm looking for anyway. And then Office Depot, that's just a crazy story. So that's all I got, guys. I wanted to share this top 10. Let me know if you are, watching any of these or you've recently added any of them to your portfolio. I'm curious to hear from you and kind of what your investment thesis is if you have added any of these to your portfolio. So with that, I will leave you guys to hopefully a very pleasant and safe 4th of July weekend. All right, guys, see you in the next video. Take care.